Well, let's play out some more snippets from my conversation with market veteran Ramesh Damani as part of our series Market Cafe. I asked Ramesh about the here and now, whether the market has completed its correction and what the future course is. Ramesh says that the bull market run has resumed and what we saw was simply a small correction in an ongoing bull market. He also talks about why he's not too perturbed about the direction of FPI flows.
The good news, Surabhi, is that in my opinion, again, these opinions can be wrong, but in my opinion, we're in an ongoing bull market.
Okay.
What happened was the first correction in 4 or 5 years, so it was particularly severe. And market correction is always severe. It always kind of panics you and tests your conviction, tests your patience, which is all the things that it did. But they are short, sharp, and swift. As you saw, the index fell very sharply and very swiftly, almost without respite, 800,000 points a day after that. But my feeling is that that is just a correction in a bull market, not the topping of a bull market. The reason I say that is even when the fall started, individual stocks were making new highs, new all-time highs. Bajaj Finance, United Phosphorus, Shree Cement, so many companies, good high-quality businesses were making new high. That would typically not happen in a bearish phase of the market. Secondly, more importantly, in the last 60 to 90 days, I put I had the road, rubber meet the road, went and visited a lot of companies, just try to get feedback on what things are in corporate India out there. And almost universally where I went, people are talking about expansion, talking about growth, talking about margins, talking about profitability. So this was more of a market event than an economy event. There's very little leverage in the system. Banks are not leveraged. The stock market is not leveraged. So it was just a correction of valuation, which had probably become excessive, took place. And now we're, resuming the bull market that began in 2021.
Well, that's really good to hear because, absolutely. I mean, we couldn't really pinpoint an economic crisis or a financial accident which triggered this. It kind of, just happened on its own. On valuations, and that's why it's a little, important to understand both valuations and the power of flows. Domestic investors were pretty much buying throughout it. And yet the market fell because we were being hit by 8,000 crores, 10,000 crores of foreign selling on a daily basis, right? Now they've stopped selling. In fact, now first trickle of buying has come through. So while we can't predict flows, perhaps we can't underestimate the relevance also, right?
You can't. I appreciate that. And a lot of my friends pay a lot of attention to the FI number, which I really don't.
Okay.
Because anytime there's a transaction on the stock exchange, there's a buyer and a seller. So if the foreigner is selling, someone is buying at the other end. Stocks don't go in a zero hole on the ground. I mean, there's always a buyer at the other end of the stock. So things are being bought. Someone who thought it was expensive was selling it or booking profits. Someone thinking it's value and he can make money, so he was buying it. So, that takes it. Of course, it's important. I'm not denying the importance of the FI number out there. But I don't particularly pay too much attention to it. It's just one of the things we look at out there. What we particularly pay attention to is on the ground, what's happening. Is the company, how is the company dealing with the Trump tariff? How is the company dealing with inflation? How is the company dealing with the changing technology environment? I think those are more relevant questions for an investor to ask in a bottom-up manner. And I think that's just noise that you can't control. The FI is going to sell tomorrow, how do you control that? If oil spikes up, you can't control that. If Ukraine war ends or does not end, you can't control that. But you can control what you buy. And you want to buy those businesses that are, doing good, bulletproofing themselves. And which is what I've done, which is what's been very successful the last few years.
Fantastic. Take your point completely. There's always a buyer on the other side.
There always is. So, what does it matter?
The color of money doesn't matter. There's someone putting in the money.
Psychologically, it matters, but actually it doesn't matter. The shakeout has been good. It has tested you. It has, proven that you have a conviction in what you buy. And there's no something called easy money on Dalal Street, as everyone thinks that I buy today, make tomorrow, which had gone on for a few years. But all the veterans have told you that, wait, when the correction comes, people will panic. But I think if they hold true to the flag and, I think it's great. I think the domestic money prospering or domestic India is great. We welcome foreign money, we welcome foreign capital, but they have a right to sell and I don't begrudge them that.
So absolutely, Ramesh. I mean, I completely agree with you. May this wave of domestic money, may it become a tsunami and may it continue for all our sakes. But my question was more sort of regarding valuations and whether so much of domestic money continuously coming in the market, whether that will sort of create its own valuation challenges.
Surabhi, the market has a self-correcting mechanism, which we just saw. I mean, the index fell, 10, 12% from the peak. So it has a self-correcting mechanism built in. When valuations get too high or too stretched, someone on the other side will say sell,
Yeah.
and it cannot be absorbed by the market, which is exactly what happened. So why worry about it? It's
Okay.
market is a self-correcting mechanism. If you take stocks to unbelievable heights, the short seller will step in, or the promoters will sell in, or the insiders will sell in and want to encash it. So that will act as a natural check on the market, which it has done. As long as there's not any undue amount of leverage in the system. There was, I think, 70,000 crores of margin funding, which is the size of a small mid-cap company in India today. So there's no leverage. The banking system has no leverage. The government had fiscal restraints. So, in fact, money was tight. So there was no reason to believe that this would be a long-lasting bear market.
Sure.
And market will correct itself. Anytime the valuations of something become excessive, people step in and sell. Insiders sell, someone sells, and that creates a buying opportunity.
Okay, so there you hear Mr. Damani sounding optimistic on India as always and saying that this was just a small phase of a correction in an ongoing bull market. Market Cafe Season 2, more from that conversation coming up through the week.